Group 1 Automotive rising nearly 7% this week after the company beat on the top and bottom lines, recording record quarterly profits. The company noted a slight increase in inventory, but said declining used car prices require them quickly to sell through that inventory in order to maintain margins. For more on the auto market, let's bring in Earl Hesterberg, the CEO of Group 1. It's great to talk to you today, Earl.
Thanks for having me.
Brian's phone's going off because
I didn't even know it was on. I got so excited talking about cars, but I saw the Astros jersey in the background. It's probably Tillman Fertitta calling. Who knows?
Listen, Earl, let's talk about
I don't know how that happened.
It just does sometimes, and then you just roll with it, Earl. Can you tell me has something changed where you're seeing the used car prices go down and why you've had to work through that inventory?
Well, we expected used car prices to go down at some point because they were at all-time highs, and quite frankly, those were unsustainable. So we've been preparing for this, but when used car market prices decline, we keep a very lean inventory of about 30 days. We have to flush that retail out quickly so we can rebase our price level at the latest market prices. So we had to do a bit of that last quarter. And we're pretty clean again, I think.
We're talking to a lot of CEOs across industries about the way they're looking at their business and what it indicates about the broader economy. Where are you seeing signs of weakness? Are there customer patterns of behavior that you're paying especially close attention to?
Yeah, for sure. And some of these economic factors aren't ideal for retailers. But it's in the more price-sensitive parts of the market, lower-price used cars. Now, historically, we sell a lot of Corollas and lower-priced new cars, but that's not where the market has been in recent years. You know, you see the average sale price of a new vehicle for Group 1 is almost $50,000. So our sales and our waiting list, our order bank, these tend to be big pickup trucks, big SUVs, and luxury brand cars. So our business is in a different place right now than it was 3 years ago in terms of the merchandise we're selling.
Yeah, and you wonder, Earl, if this could be a good time for new car sales. I know it sounds counterintuitive, but typically banks are tighter on lending on used cars. The older the car, the tighter the lending. Some cars you may not even be able to get a very good loan. Those rates could be 10, even 12%, depending on the age and credit score of the car. And a lot of people have not been able to get cars over the last couple of years. And I personally know a lot of people that have been waiting for prices to come down just a bit, driving old beaters because they're waiting. Do you feel like there is any pent-up demand in the system?
Yeah, there is definitely. We've been operating in both the UK and the US now for 3 years at recession sales levels. So there is pent-up demand out there. And interest rates have impacted monthly payments. They're higher. And we've seen a little bit of a couple of auto manufacturers buying down some interest rates recently. Not to 0 or 1%, but down to 3.9% or something like that. And we'll probably see a little bit more of that. But there's still an order bank for many of our brands.
Earl, you made some acquisitions this summer, a collision center, I understand, in Louisiana, and then 3 dealerships. What about for you? Is there still appetite for you to do acquisitions in the current environment?
Yes, there is. That's the best use of our capital, but we have to be much more careful now with the higher cost of capital and higher interest rates. We need to make sure that what we purchase is in a great brand and great market. For example, this year we purchased a Toyota dealership in Austin. Great brand, great market. So we have to be a little bit more careful in these kind of market conditions.